My brother emptied our late father's entire $88,000 estate account before probate even closed. The bank's fraud team flagged every single transfer, all of them routed directly into his personal checking account. When I projected that flagged report onto the wall at a family meeting, he still tried to explain it away. What he didn't know was that the bank had already found the second account he opened using our mother's forged signature. He didn't just steal from me. He stole from her too. And when the final transaction report hit the table, his entire life collapsed in front of everyone. My name is Carol. When my father died, he left $88,000 to be split between my brother Stephen and me. Stephen was the executor, so he controlled everything. Months passed with no distribution. Stephen blamed probate delays. But I pulled the bank's internal transaction log myself. The fraud team had already flagged every transfer. All of them went straight into Stephen's personal account before I ever confronted him. But to understand how it got that far, you have to go back to the day our father died. His name was Robert. He was 67. A quiet man who worked 40 years in municipal water management, never missed a payment, never carried debt. When he passed, my brother Stephen and I were named equal beneficiaries. The estate wasn't massive. The house, some savings, and a single bank account containing exactly $88,412. That account was supposed to be split evenly. Stephen was the executor. He was my older brother, the one Dad always called the responsible one. Stephen was a licensed financial advisor. He had a reputation, a career, a professional designation hanging on his office wall. So when he told me after the funeral that probate would take some time, I believed him. He said the bank required a formal court order to release funds. He said the IRS needed to clear the estate's final tax return. He said there were forms the state hadn't processed yet. Each excuse came with a veneer of professionalism. I trusted him because I wanted to. We had lost our father. The grief was heavy enough without adding suspicion. But weeks turned into months. 4 months passed, then 5, 6. Stephen kept saying the same thing, probate delays. I had bills stacking up. I was a project manager at a construction firm, not wealthy, and I had been counting on that inheritance to cover my daughter's tuition and the equity line I had taken out to help Dad with his final medical costs. Stephen knew this. He'd nod sympathetically and tell me he was pushing the bank as fast as he could. My mother, Ellen, noticed it too. She and Dad had divorced years earlier, but his will named her as the backup beneficiary if anything happened to us. She asked me at lunch one afternoon why Stephen was driving a new SUV. I shrugged it off. Maybe business was good, but something in her voice planted the first real seed of doubt. I started paying attention. Small inconsistencies. Stephen stopped answering my calls on weekdays. His texts became one-word replies. When I asked for a formal accounting, he said the statements weren't ready yet. A licensed financial advisor should have those statements at his fingertips. That's when I decided to go around him entirely. I walked into the bank branch where my father had held his accounts for 30 years. I asked to speak with someone about the estate account. The teller's face shifted when I gave the account number. She asked me to wait and disappeared into a back office. After 20 minutes, a branch manager came out. She sat me down in a glass-walled office and told me there had been unusual activity flagged on that account. The bank's internal fraud team had already launched a review. She said she could print the transaction log right there if I had proof of beneficiary status. I handed her the death certificate and a copy of the will. What she handed me next would expose everything my brother had been hiding. The branch manager handed me a stack of papers. 6 pages. The transaction log for my father's estate account. I didn't even have to flip past the first page. 3 cash transfers, all initiated within 4 weeks of my father's funeral. The first was $20,000, sent directly to an account number I recognized instantly. Stephen's personal checking account. The second was $30,000. The third was $38,412, draining the account down to zero. The dates lined up perfectly with the months Stephen had been telling me probate was backed up. He wasn't waiting for a court order. He was moving money while I grieved. I asked the branch manager to confirm the destination account holder name. She typed it in, turned the monitor toward me. Stephen Anderson. Residential account, his home address on file. She said the bank's algorithm had flagged the transfers almost immediately. An account belonging to a deceased customer suddenly wiring the entire balance to one beneficiary's personal account in round, rapid sums. That wasn't a gray area. That was textbook embezzlement. The fraud team had already filed a suspicious activity report with the Treasury Department. The case number was on the printout. I remember sitting in that glass office trying to breathe. My brother was a licensed financial advisor. He held a Series 65. He managed retirement portfolios for dozens of clients. He knew exactly what a fiduciary duty was. He just didn't think it applied to his own sister. I didn't call Stephen right away. Instead, I went home, scanned every page into a digital folder, and then I called the bank's fraud investigations unit directly. They confirmed what the branch manager told me. The transfers were flagged as internal fraud. They had freeze notices drafted, but by then the money was already gone. Moved out of Stephen's personal account into a credit union I'd never heard of. He had layered it. I called my mother that night. Not to accuse him yet, just to ask a simple question. Did Dad ever change the backup beneficiary paperwork before he died? She said no. She also said something else that made my blood run cold. She mentioned Stephen had asked her a few months back to co-sign some estate paperwork he said was routine. She signed something. She couldn't remember what. But she never set foot in a bank. That's when I knew it wasn't just one account. I hired a forensic accountant the next morning. Within 3 days, she uncovered a second estate bank account I had never been told about. It had been opened at a different branch, 3 weeks after the funeral, under the name Robert Anderson Estate, with a cosigner listed as Ellen Anderson, my mother. The signature on the cosigner line was a clumsy forgery. My mother's actual handwriting slants forward, elegant. This signature was flat, labored, as if someone had traced it slowly, repeatedly. Stephen had created an entirely separate financial vehicle, parked money in it, and used our mother's forged consent to do it. By the end of the week, I had a folder on my dining table 3 inches thick. Flagged transfer reports, the SAR filing, the forged signature analysis, statements from both accounts, and a timeline that proved Stephen had been liquidating Dad's estate months before I ever asked a question. There was only one step left. I had to look him in the eyes and give him a chance to explain before I walked this evidence into a courtroom. I called a family meeting. I told him I had updates on the estate and that Mom needed to be there. He agreed, probably thinking I'd finally given up. He had no idea what was on that projector. Saturday morning, I loaded the bank reports onto a USB drive, practiced my opening line in the mirror, and drove to my brother's house. He opened the door with coffee in hand, calm, unbothered. And I smiled, because in 20 minutes he was going to have to explain to his own mother why her forged signature was sitting on a fraudulent bank account. We sat in Stephen's living room. Leather sectional, gas fireplace, framed photos of his kids on the mantel. He had remodeled the kitchen 6 months ago. New granite countertops, custom cabinetry. I noticed things now that I hadn't noticed before. The new SUV in the driveway. The boat he'd mentioned buying. The vacation to Cabo he'd posted on Instagram. At the time, I'd thought his advisory practice was booming. Now I was doing math in my head. 20,000 plus 30,000 plus 38,412. That remodel cost about that much. My mother arrived 10 minutes after I did. She sat in the armchair by the window, holding her purse on her lap like she knew something was wrong but didn't know what. Stephen poured coffee. He was relaxed. Confident. He asked what the big update was, and I told him I'd pulled the estate account records from the bank. His expression didn't change. Not a flinch. He just said the bank shouldn't have given me those. I asked why not. He said because the executor controls all disclosures. That was his first mistake. He didn't deny anything. He asserted control. I set my laptop on his coffee table and opened the first document. The transaction log from the primary estate account. 3 transfers, all to his name. $88,412. Gone, the dates, the amounts, the destination account number with his home address attached. My mother leaned forward to see the screen. Stephen's voice stayed calm. He said those were reimbursements for expenses, funeral costs, legal fees, property maintenance on Dad's house. He said I was being emotional and not understanding how estate administration worked. So I pulled up the second document. The bank's internal fraud flag report, stamped with a case number, and the heading Suspicious Activity Report filed with FinCEN. I told him this was not a dispute between siblings. This was a federal financial crimes database entry with his name on it. My mother asked what FinCEN was. I said the Treasury Department's Financial Crimes Enforcement Network. The same agency that tracks money laundering and terrorist financing had flagged our father's estate account because of Stephen's transfers. Stephen's voice changed, lower, tighter. He said the bank had made a mistake, that he could clear it up with one phone call. That was his second mistake. He kept digging. Then I pulled up the third document. The second estate account. the one I was never told about, opened 3 weeks after the funeral at a different branch. The cosigner line showed my mother's name, Ellen Anderson, with a signature she had never written. I asked him to explain how Mom had co-signed an account she never visited. My mother stood up, she walked to the laptop and stared at the signature. She said it looked like hers but wrong, the slant was off. The loop on the E was too round. She turned to Stephen and asked him directly, "Did you sign my name?" He didn't answer, he just stared at the screen. I pulled up the forensic handwriting analysis. The report was preliminary but the findings were clear. The signature showed evidence of tracing, hesitation marks, inconsistent pressure. It was a forgery. And in all 50 states, signature forgery is a felony. My brother, the licensed financial advisor, had committed a felony against our mother to hide estate assets from me. My mother started crying. Not loud, quiet, her shoulders shaking. She asked him why. He said nothing. She asked if he had opened any other accounts. Credit cards, lines of credit. He shook his head, but I was already pulling up the next document. The forensic accountant had found a credit inquiry in the estate's name, dated 2 months after Dad died. It matched a Visa application with an $18,000 credit line. The mailing address was Stephen's house. This was no longer a case of a stressed executor making a bad decision under grief. This was systematic, planned, layered. He had drained the primary account, opened a secondary account using a forged cosigner, applied for credit in a dead man's name, and routed every cent into his personal finances. And he had done all of it while telling me probate was simply running behind. I asked him one question. How long had he been planning this? He didn't answer. But the timeline told the story. The second account was opened 5 days after the funeral. The first transfer hit before Dad's death certificate was even finalized. He hadn't snapped under pressure. He had moved at the first possible moment. That's when he finally spoke. He said I didn't understand the pressure he'd been under. His practice was struggling. He had debts I didn't know about. He said Dad would have wanted him to land on his feet. My mother stopped crying. She looked at him and said, "Not like this. Not stealing from your sister, not forging my name." Then Stephen said something I will never forget. He said I was being vindictive because I'd always been jealous of his success. He said the money was rightfully his because he'd been the one managing Dad's finances for years. He said I should be grateful he'd handled everything while I was too busy with my own life to help. He was sitting in a living room I had effectively paid for, telling me I was the problem. I closed the laptop. I told him this family meeting was over, and that I was giving him 48 hours to return every dollar, plus the forged credit line balance, into a neutral escrow account managed by a probate attorney. If he didn't, I would file a formal complaint with the state's Financial Regulatory Board, submit the SAR documentation to the district attorney, and pursue civil litigation for breach of fiduciary duty, fraud, and conversion. He would lose his license. He would lose his practice. He would likely face criminal charges. He laughed. He actually laughed. He said I was bluffing, that I wouldn't destroy my own brother. And that's when I realized he still didn't understand what he had done. He thought this was a family squabble that would blow over. But the Treasury Department already had his name. The fraud flags were already in the system. This was no longer about whether his sister would forgive him. It was about whether the state would let him keep his professional license and his freedom. I stood up, helped my mother to her feet, and we walked out. Behind me, the fireplace was still burning. The family photos were still on the mantel, and my brother was still sitting on his leather sectional, alone, about to learn what happens when the system catches up to someone who thought family was an exception to the law. The 48 hours came and went. Stephen didn't return a single dollar. No wire transfer, no escrow deposit, not even a phone call. He had gambled that I was bluffing. On Monday morning, I walked into the district attorney's office with a binder containing the flagged SAR report, the forged account documents, the forensic handwriting analysis, and the transaction logs. The intake prosecutor didn't even finish reading before she picked up her phone and called the Financial Crimes Division. She said cases this clean rarely walk through the door on their own. The state's Financial Regulatory Board moved faster than I expected. Stephen held a Series 65 license through FINRA, and the board takes fiduciary breaches by licensed advisors extremely seriously. Within 2 weeks, they opened a formal investigation. The SAR filing meant the Treasury Department had already done half their work for them. They issued a temporary suspension pending the outcome. Stephen's practice was frozen. His clients were notified. His office manager quit the same day the suspension letter arrived. But here is the thing about institutional investigations. Once they start digging, they don't stop at the one account you reported. They pull everything. Every client file, every transaction, every account where Stephen held discretionary authority. And what they found in those files was worse than anything I had imagined. Stephen had not just stolen from our father's estate. He had been running the same scheme on at least 4 elderly clients at his advisory practice. Small accounts, people in their 80s, widows mostly. He would open secondary accounts under their names with forged cosigner lines, slowly drain the original accounts into the secondary ones, then transfer the money to himself in increments just below the reporting threshold. He had been doing it for years. The estate fraud was simply the first one where the victim's daughter caught him in real time. When the news broke, it made the local paper. Financial advisor accused of embezzling from elderly clients. Stephen's photo was on the front page of the Metro section. The comments section filled with former acquaintances expressing shock, clients asking how to check their balances, and people he had known for decades saying they always thought something was off. Our father's name was in the article. So was my mother's. The family stain was now public record. The criminal charges came 6 weeks later. 3 felony counts: embezzlement, forgery, and identity fraud. Stephen was arrested at his home. My mother called me from her house crying, not because she felt sorry for him, but because she had just received a letter from the credit union about the forged account. They were pursuing her for the fraudulent credit line he had taken out in her name because, on paper, she was the cosigner. She had to hire an attorney just to clear her own credit. That was the moment she stopped calling him her son and started calling him the defendant. The plea deal took 4 months. Stephen pleaded no contest to all charges in exchange for a reduced sentence recommendation, but the court still handed down 18 months in county jail, 5 years of probation, and full restitution. The restitution order covered the estate funds, the forged credit line balance, and the money he had stolen from the elderly clients. He was ordered to liquidate all assets. The boat, the SUV, the remodeled kitchen. Everything he had bought with stolen money was sold at auction and the proceeds were distributed to the victims. The victims. That is the part that still haunts me. One of the elderly clients, a woman named Margaret, was 82 and had been with Stephen's firm for 15 years. She had trusted him. He had handled her husband's accounts before he died. She had no children, no family nearby. She had lost almost $60,000. When the prosecutor called her to testify, she said Stephen used to bring her flowers on her birthday. She said she thought of him like a son. I sat in the courtroom and watched her hands shake while she spoke. Margaret died 3 months after the sentencing. She never got her money back. The restitution checks arrived, but she was already gone. The funds went to her estate, then to a charity she'd named in her will. I think about her often, about how Stephen's greed didn't just steal money. It stole dignity. It stole the final years of peace she should have had. He didn't just break the law, he broke that trust that holds a community together. The state permanently revoked Stephen's financial license. He can never work in the securities industry again. He can never manage money, advise clients, or hold fiduciary authority. His professional reputation is gone. The firm he built for 12 years dissolved. His wife filed for divorce before the plea deal was even finalized. He lost the house. He lost custody of his kids under anything but supervised visitation. He lives in a 1-bedroom apartment now, working a night shift at a warehouse. I know because someone sent me a photo of him in a company vest at a loading dock. My mother and I are closer now than we have ever been. We went through something that should have destroyed us, and instead it forged a bond that grief alone could not have created. She changed her will the day after the sentencing hearing. My name is the only one on it now. She told me she had already lost 1 child to his own actions, and she was not going to let her legacy become another tool for him to exploit. As for the inheritance, I recovered roughly half of what he took. The bank, after much negotiation, credited back the funds from the flagged transfers under their fraud protection policy. The insurance settlement covered some of it, though not all. I used what I received to pay off my daughter's tuition and to set up a small scholarship in my father's name at the local community college. It felt like the only honest way to spend his money, investing in futures he would have believed in. Some people ask me if I regret turning in my own brother. I don't. What I regret is the years I spent trusting him while he was already dismantling our father's legacy. I regret not asking questions sooner. I regret that my mother had to learn her own son had forged her name, but I do not regret looking him in the eyes and choosing the truth over the comfortable silence that predators rely on. Some families are built on loyalty, others hide behind it, and the ones worth protecting are the ones that survive when the truth finally comes out. The bank flagged every transfer. The Treasury Department filed the report. My brother thought family loyalty would protect him from the law. It didn't. When you hear stories like this, it's easy to think it's rare, that people don't actually steal from their own siblings, their own mother, the same woman who signed every permission slip and packed every lunch. But it happens far more often than anyone talks about. Estate theft thrives in the silence families keep. It relies on the assumption that blood is thicker than a paper trail. If you're watching this and something feels off in your own family's estate, trust that instinct. Ask for the bank statements. Verify the signatures, because the person who tells you to just be patient is sometimes the person benefiting from your patience. My brother had a license on his wall and a decade of community trust. None of it stopped him. It just made him better at hiding it. If this story resonated with you, please take a second to like this video and subscribe. Drop your location and local time in the comments. I love knowing where in the world you're listening from. And if you've ever uncovered something similar inside your own family, share your story. Someone else might need to hear it tonight. My name is Carol. My father left behind $88,000 and 2 children. One of them tried to take everything. The other learned that the truth, no matter how painful, is worth more than any inheritance.